Rob's Child here. I know it's been a while since my last video. I'm taking a break from the security analysis chapters until next week. I have some other work things going on. Reminder, nothing I say is any kind of investment advice. So today I wanted to bring up treasury bond yields and their relation to growthy tech, specifically ARK funds, ARK funds that Cathie Wood manages. I've been noticing that the 30-year treasury bond yield has hit kind of a ceiling that it's trying to break through, around 4.4% now. It's anybody's guess whether or not it'll go higher from here or it'll drop. I'm personally waiting kind of for another signal to give me the go ahead to put all the rest of my cash into long duration bonds, because overall I'm pretty bullish on the long treasury bond. I'm mostly excited about it because of the leverage that you get on the capital gain resulting from interest rates dropping. So something like ZROZ or even TLT are, in my mind, a really fun place to be if you feel like you can accurately predict where interest rates are going. I may be very wrong on this, but I don't want to miss the opportunity, and so that's why right now I have about 23% of my portfolio in it, and I have about 17 or 18% cash, so I'm waiting to put into it and as well. And if we get another stock rally before the tightening really starts to affect what's going on in the economy dramatically, then I'll be able to sell. I'll be selling a lot of equities and going all in probably on treasury bonds. And so it's why I have a big interest in it. Partly what got me on it in the first place was watching Stephen Van Metre, the dethroned bond king, as I'll call him, because he's stopped trying to promote bonds, which is really funny because I feel like, if the bond king, has given up on bonds, that's actually a signal for me that maybe I should go all in on bonds. But that's another topic, but it's all related. So the main part of the discussion I wanted to bring up today is how treasury bond yields relate to growthy tech, specifically ARK funds, ARK, with Cathie Wood. I've been thinking about this, how typically higher interest rates on the long end of the curve usually have the biggest impact on growthy stocks. And the reason is because growthy stocks, a lot of them aren't set to make any money for a good amount of time. And so they sort of function in a similar way to long-dated bonds. One part that I think is important to understand that I kind of just realized while I was sleeping, I think, was how, it's important to realize when we're buying stocks that this is not a 30-year commitment. This is a forever commitment. I like to think of growthy tech stocks as perhaps, imagining that it has sort of a 120-year duration. And I think if you see it that way, we're not seeing another low point in ARK funds right now. And I think that's sort of signaling to me that the longer picture past 30 years may be, I think it's significantly, if you had a treasury bond that was 120 years, I think that the yield on that would be even lower than where the 30-year bond is right now. And that has to do with demographics. It has to do with a host of things. But what it tells me too is that, if the 30-year bond, I think, will be levered down in yields because of even further out expectations of probably more disinflation. And I think the markets see that. And I think that's why, again, we're not seeing even greater losses in ARK funds. They're not at their bottom right now, and yet we have the 30-year Treasury bonds at a bottom. We have the yields as high as they've ever been right now. So I thought that was an interesting thing to consider, interesting thing to talk about. But going back to the duration, like, well, why, 120 years, what does that have to do with anything? I think 120 years is a good way to think of, like, really super growthy stuff, because it's going to exceed your lifetime. I believe, by the way, there have been bonds in the past that may have had 100 years on them. I know there's 60-year bonds, corporate bonds, that I think are still put out there today. And that's making me realize now that I should probably check to see how the yields are doing in super long dated corporate bonds. Is there a fund for that? I'm going to go actually do some research right after I'm done with this. But main point being, because of where I see the pricing of ARK right now, spells out to me that past 30 years, yields are probably lower in the market's eyes. And so, if you can think of the 30-year bond yield as a short-term yield compared to, ownership of a stock, which is forever. That's why I say 120 years. It's forever. It's for a lifetime. A stock doesn't expire. A stock doesn't get returned. When you own that stock, you own it. You're buying it forever. It's a forever investment. It's not one that you get the principal back someday along with interest. No, you own it. You own the company as long as the company exists. I think that's all I had to say regarding this subject. It's just something to think about. Hope you enjoyed this episode. Rob's Child.